Hello YouTube, I'm Duarte from Still Not A Millionaire, and in this episode I bring you a refined strategy because on the first video I must confess the draft that we made was still very incomplete. So let's jump right into it. And here we are in the brand new spreadsheet. Okay, I've just made some adjustments. Let's see what I've made here. Okay, so I've added another page, as you can see down here when it's named the portfolio, but we'll go one page at a time. Okay, now the first page is still the structure of our strategy. Okay, the objective is still to be a millionaire. Initial amount is the same. If you remembered, I have used in the previous video an online calculator. This time I have made the calculations for myself because this way I can more easily manipulate the numbers here. Okay, for example, I wanted to consider one important dimension that some of my friends have reminded me, that is taxes. Okay, so in the interest rate I need to consider the after-tax interest rate. In my country, capital gains and dividends are taxed at 28%. Okay, in order to calculate the interest rate, I need to simply come to the normal interest rate and multiply by 1 minus your tax rate. Okay, in this case this means that instead of the 8% after tax I would get only 5.76% return, okay, in net terms. And this will in fact, of course, affect the future value that we'll get. Okay, I have made this formula is a basic formula. Okay, I'll leave it in the video, but is simply the sum of compounded present value. Okay, that is the initial amount, and the annuity. In this case I've converted it to a monthly annuity, and to say in order, because I want to save each month 400 euros. Okay, and if you see, the difference of taxes is quite significant. If you remind, previously I had 1.037 million. Okay, and afterwards I end up with not even 600 euros. Okay, this means that well, of course, if I add again a higher interest rate, this would come closer to the one I had before. And but this means that, for example, now in order to go to the 1 million again, I will need an interest rate of 11% instead of the 8% that I was considering before. Okay, but let's leave it here still in the 8%. Okay, now the thing is, why have I made these calculations by myself? Okay, because this way I can more easily reach the number of years or number of months I need to invest and to stick with this plan in order to reach 1 million euro. Okay, and you can use a simple Excel function for this, such as solver or goal seek. Let's use, for example, goal seek, and I want to set this cell equal to 1 million. Okay, by changing the cell. For example, you could change interest rate, or even you could change the number of years. In this case, I want to change the number of years first. Okay, let's try and see how many years I would need. In order to reach precisely 1 million, I would need 44 years. Okay, and considering that I am 23 years old, okay, this means that I would end up with 67 years old. Okay, it's near the age of retirement in my country, but well, let's try to manipulate this a little bit. For example, if I wanted to retire in 30 years, okay, so this means I would have 53 years. Okay, it's better. Let's use again the goal seek function, and once again set this cell to 1 million by changing now the cell of well, let's try interest rate also. Okay, I would need a 14% interest rate. That will lead to an after-tax interest rate of 10.25. Well, 14% is already quite high. It means that I would have to face some potential risks, and well, in my perception, it's not very realistic to assume that I would be able to consistently have a 14% return during 30 years. Okay, I would be an amazing investor. So I don't think that this is the path. Changing the interest rate. I think we could increase it, for example, by 10%, as we have already saw. Some studies suggest that stock markets can sometimes average around 10%. Okay, so let's imagine and leave it there, but remind that we are being quite optimistic already. Now, our last try will be to change the monthly investment that we need to do. Once again, set sell to 1 million, and let's change the amount that we need to save each month. Okay, as you can see, this also doesn't seem to be a good plan, because I would have to save around 7,700 euros. Oh, I'm sorry, 770 euros every month. And then, well, at least taking into account my current income, this would be unbearable. Okay, but as you can see, what I wanted to show you is the dynamic that I have here in my strategy. And if you want, of course, feel free to copy. Okay, I will leave you here the formula if you want to copy. Okay, just freeze the video, for example, and let's continue. How to do it? The same way. Okay, we want to minimize our expenses, revenues from full-time job and part-time job. Okay, I'm still an intern, so I want to believe that the income from my full-time job will increase significantly as time goes by. Now, so what we want to do is basically take these receipts from my full-time part-time job to build a portfolio with monthly investments. Okay, to build that discipline, that consistency. One thing that I also found in the internet that I thought it was very interesting is a sort of calculator to estimate according to your annual income and annual savings. Annual savings and also annual expenses, how many years you would need in order to become financially independent. Okay, of course, this is a different goal. Okay, we are talking about becoming a millionaire, but for example, in order to be financially independent, that is, don't depend on a full-time job, for example, in order to make your current payment, okay, the expenses you need to do in order to live, then it's different to have an objective of having 1 million or only being financially independent. For example, if you have low annual expenses, you might not even need $1 million in your bank account in order to retire earlier. Okay, but this is also interesting if you want to search it on Google. Simply search for I know calculator for financial independence. This is the site, okay, networthify.com, and you will get it easily. Okay, last but not least, it's also important to estimate your revenues and expenses, which is also associated with which are basically the inputs you will need for this calculation. Okay, and I've estimated, well, it's easy because I don't have that much revenues and much expenses at the time. Okay, this is a sort of estimate for a stable phase in my life. As I've already said, I'm still an intern and I don't have that much expenses, but I predict that, for example, from my full-time job, in like, I don't know, 3 years, I would get a net salary of around 1.1 thousand euros. Okay, and from my part-time job, 100 euros per month. Okay, these are measures per month, which means that I would get a total revenues of 1.2 thousand euros. And regarding my expenses, once again, some of these might not be that high. I'm being a little cautious here, okay, and I'm kind of underestimating my revenues and overestimating my expenses, but this is only in order to define at least a minimum target that I want to save every month, okay, and this I've reached a total of 330 euros per month, which, as we've already saw from my initial calculations, is quite low for our objective, but is a starting point, okay. I still plan to earn more than this in the future, and there are probably some ways that I can cut even more my expenses, but later on. Then we'll be here. I will make the basically the I will take some notes about the structure of my portfolio. I'm thinking of doing this every month, okay? Currently, as you can see, in 31 of August of this year, I had most of my portfolio in cash, okay? Because I'm still building my savings and so on. A part of it was in crowdfunding, a platform known as Mintos, that I will talk eventually in another video, and some of it in ETFs. But these ETFs was sort of a dumb decision that I just wanted to invest some money due to the, well, dynamics that it brings, but it wasn't the smartest idea at all, and I'm just waiting to reach break even in order to liquidate this position and move on, okay? Cash flows is still the same. As you can see, I've made some more expenses, but nothing that dumb, okay? And the last page, which I've already shown to you, but now is more structured, is where I will register my net worth, okay? I will also do it on a monthly basis, I guess. As you can see, this, of course, I won't disclose all my money. I have other savings, other expenses and so on, but this is just to get an idea. And I have some funds in DeGiro and eToro, which are basically some brokers, okay? DeGiro, I invest more in ETFs, eToro more in individual stocks. Mintos is the crowdfunding platform I talked previously, and also some cash to invest, okay? Let's say, for example, €300, okay? As you can see, one of the good things of being young is that I still don't have any liabilities, so which makes my net worth equal to the sum of my assets, okay? Of course, my idea is to, in the future, bring this, increase this gradually while investing the income I have from my full-time job and my part-time job, while keeping my debt as low as possible, or even in existence like I have today. But this might not always be the case, because, for example, in the future I plan to buy a house and so on, and this will of course require for me to take a mortgage, and this will already increase the complexity of calculating my net worth. But it will take many years, so as you already know, don't forget to subscribe and leave your like. As you can see, now our strategy is a bit more refined, or at least the spreadsheet is more appealing to us, but now we have everything that we need to start our strategy and start building our portfolio. And this is precisely what we will do in our next video. So make sure to like, subscribe, and I will see you there.